Utility sector rising nearly 4% this week. Its best performance in a year and a half. Welcome to Trading Nation. I'm Eric Chemi. Today we've got Zachary Karabell, Head of Global Strategy at Envestnet, and Erin Gibbs, Equity Chief Investment Officer at S&P Global. Erin, I want to start with you. When you look at these charts, what does that tell you in terms of how you want to position a portfolio here? Are you going to buy more?
No.
So emphatic. That was an emphatic no.
No, I am not getting more into utilities. Yeah, when you look at particularly valuations for utilities, they're actually trading a little above their 3-year average. They're not super expensive like we see with the broader market, but they're certainly not cheap. So I don't see this as like a great opportunity to get in. But more importantly, when you look at expected profits for 2017, utilities is the only sector with negative growth expectations for this year. It is the absolute worst sector for profit growth for this year. So I really just don't see this as the point where you want to get in when we're actually expecting profits to contract. That combined with potentially raising interest rates that hurts utilities on a twofold basis. One, it makes the dividend yields look less attractive, and two, they're capital intensive. They're going to have higher borrowing costs. So we just don't see it as a strategic play for 2017.
Zach, I want to move to you. Erin just touched on this a little bit. The obvious, finance 101 concept here is that, higher interest rates, they make bonds look better. They make dividend stocks like utilities look worse. So if I think rates are going up, then maybe I don't want to touch utilities. Is that something that you would subscribe to?
Certainly described that way. It's hard to argue with. And, Erin is entirely right that it's always a relative allocation, right? Money spent on sector X is not money spent on sector Y. There are a lot of areas of the market that offer some dividend yield with the prospect of price appreciation. Some of the staples, some of the, the big industrials. So if one's goal is a little more conservative with yield with equities, right, and there's a lot of reasons that could be attractive as well, but with the potential of earnings and price appreciation, there's a lot of areas of the market where one could find that. Again, I think right now it's just, a lot of the market is going up because a lot of the market is going up. And I think there are good, solid, fundamental reasons for a lot of the market going up. So I'm not poo-pooing that. But that doesn't mean that week to week, each sector is responding exactly as it should and moving exactly as you think it ought to.
All right, well, and then I'll just end it with Erin really fast. If for some reason, if I'm an investor and I just think, all right, President Trump, he's going to get rid of all this energy-related regulation. Maybe that's good for utilities. Maybe that's a reason I should buy. What do you tell an investor who's got that kind of mentality?
I would say I'd really want to see that regulation get passed before you put any money into it.
I think that is as clear as you can be. Until something happens, let's just leave it where it is. Thanks again to Zachary Karabell, Erin Gibbs. This is Trading Nation. I'm Eric Chemi. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.